Hello, Moms at Work community. My name is Susan Cruickshank, and I was asked by Allison to talk to the group about the new government benefits. Um, I'll just give a little intro on myself, just to let people jump on to the live. My name is Susan Cruickshank. I am a CPA CGA. I'm a senior manager at BDO Canada LLP. Please note that any information I say here should not be taken as, proper advice, in this fact that I don't know all the details of your situation, and I always recommend that people speak to an advisor such that they can get all the details of their situation, as one little thing could change things greatly. So basically what we're going to try and unpack today is all of the new government benefits that are coming out. They're technically more or less effective today, but the applications are future dated on them. So this bill did pass through Parliament. I believe it's gone to the Senate. CRA website is now updated, showing all the details of when to apply and all those different pieces with it. So I have notes over here. That's why I keep looking to this side. And let's just start unpacking it. So the first benefit, the new benefit that's there, is the Canadian Recovery Benefit. So what this is you can get up to 26 weeks of payments. The payments are $500 a week, although this one, they're basically counting as every 2 weeks. So they're saying it's $1,000 benefit every 2 weeks, which is still $500 a week. But it's going to be set up very similar to like EI. So you get paid in 2 week segments. The Canada Revenue Agency did announce on this one that they are going to be withholding 10% tax. So rather than receiving $1,000 every 2 weeks, you will be receiving $900 every 2 weeks for it. So what do you need to apply for the CRB? CRB is basically for people who would not qualify for employment insurance. So where those people are going to be most caught will be people who are coming off of maternity leave that don't have a job to go to, and people who are self-employed that do not have that have not signed up for EI, and then people who were unemployed going into COVID will all kind of be captured into that umbrella. So basically with the CRB, you have to be actively looking for work. So you will be denied and penalized if you are refusing reasonable work while collecting that benefit. So with CRB, you are allowed to collect as long as in the previous 2 week period, you received less than 50% of what your regular wage is. So this piece is going to be probably a little bit complicated in that you need to figure out, what was your average wage, and then have I met the condition of meeting I'm receiving less than 50%. So it is different than EI in that EI, they say, you get 50% of every dollar taken off of your EI check based on the dollars you make. This one's not the case. This one says, if you've made less than 50% this week than what you would have made in a week last year, then you can apply. If you make 52% or 55% what you did, then you don't qualify. So it's either you get it or you don't. It's not clawed back. So that part is going to be a little confusing. And what they're looking at here for your average weekly income is they're looking at what did you make last year and what was the average of it for the year. So they do have a nice little 50% reduction calculator to determine kind of what it was. So basically all they're doing is they're taking what was your total income from employment and self-employment last year and divide it by 52 weeks. That's what your average week is. And then when you look at the current week, you would say, okay, what did I make this week? What is that in comparison to what I made as my average weekly earning? times. They do clarify that for self-employed people, we are talking about net income, not gross income. So for example, if you are a chiropractor and you see clients, you could have gross income of say $1,000, but then when you deduct off reasonable expenses such as supplies and your rent and staff that you're paying, et cetera, et cetera, et cetera, that $1,000 of revenue might actually only be, $500 of profit. So you're looking at your profit piece is what matters there. So that is in a nutshell the CRB. So the CRB is available to apply for, I believe, the middle of this month in October. And basically, so yeah, October 12th. I was pretty much bang on the middle of the month. So with the CRB, it is kind of a looking back program. So you're going to say, so when you apply on March or October 14th, you're going to look back to the first 2 weeks of October and see, do I actually qualify? With the CRB, you are allowed to claim up to 26 weeks of it. The weeks do not have to be consecutive. So you could have the first 2 weeks of October, you qualify, the second 2 weeks of October, you don't. Then maybe the first 2 weeks of November, you do, and you can kind of elect in, elect out on it. This program is run through the Canada Revenue Agency, so you will be applying through your My account, and with it, you don't automatically go to the next period. So every single period that you need to collect it, you need to go in and do the application for it. They're saying that the application should be approved within like 3 to 5 days for direct deposit. However, if you are under review, it could take upwards of 4 weeks. So we're hoping that the reviews are limited, but I'm not really sure how they're planning on auditing and figuring that piece out. So that more or less is the nutshell. There is one piece in this that I did want to draw your attention to, which is the penalties for it. So if you apply for CRB and you should not have got it, or that you are refusing work, the penalties are quite steep in that it denies your ability to apply for it in the future for so many weeks. And then there's also like monetary penalties and then potentially even jail time. So it's quite severe, and you want to make sure that when you're applying for it, you're being honest about it. This is not the government's definitely taking this seriously in terms of making sure that people are being honest about it. I'm just trying to get the penalties here. No, and I don't see them now. Of course, that was what I was looking at last night, and I can't see them today, but I can get that and post it to the group. So then the second benefit is the Canada Recovery Caregiving Benefit. So what this one is basically if you've lost up to 50% of your scheduled work week because you're taking care of a family member, then you can apply for this benefit. This one is a weekly benefit, so it's $500 a week. However, you do have to keep applying for it every single week. So every week you'd have to go in. So this one, so you can't collect it if you're also getting the sickness benefit or the CRB. So it's one of the three. You can't double up on them. This is the one because schools, daycares, or daycare facilities are closed, or a person under your care is sick with COVID-19 or has a serious illness such that they shouldn't be going to school or daycare and or self-isolating due to COVID-19. This one you can get for up to 26 weeks. What's an interesting note is it's 26 weeks per family. So the maximum you can get is 26 weeks. So if your spouse was to take 13 weeks and you were to take 13 weeks, that would max out. It doesn't allow one spouse to take 26 and the other spouse to take 26 weeks, giving you a full year of benefit. So it's kind of leveling the playing field, such that if there's a one or two parent family. The big question around this one is, what if I choose not to send my child to school or daycare because I don't feel that it's safe? CRA does have some clarification in there. A little bit in terms of like, they're just saying that basically, if you're at risk of a serious health complication, as advised by a medical practitioner can be doctor, nurse practitioner, etc. So that one, I don't, there's not a ton of clarity. I don't know how strict they're going to be on it. This will definitely be a wait and see approach for sure. So $500 a week, apply for through CRA's website, maximum 26 weeks. You have to apply every single week. And again, the weeks do not need to be taken in succession. So you could take 2 weeks now, 1 week later, 2 weeks now, 1 week later. This program right here, I could see a lot of parents using if their child is required to be home from school because they are sick. So this more or less is going to give you an extended sick time, because you could take time off from work when your child is home. That would fall under the person in your care is sick with COVID-19 or has symptoms of COVID-19. So that'd be your symptoms of COVID-19. And then basically you can have that for up to 26 weeks. So that should bridge the gap. The test is you're unable to work for at least 50% of your scheduled work week because you're caring for a family member. All the programs run from Sunday to Saturday is what they call a week. So if your child was to be homesick on like Wednesday, Thursday, Friday, say Saturday, Sunday, even Monday, Tuesday, you would qualify for that first week because you have more than 50% of the week that you are not working, Wednesday, Thursday, Friday. But you wouldn't qualify for the second week because it's only Monday, Tuesday of the following week. So that's kind of how they run that test. The third one is the Canada Recovery Sickness Benefit. And the sickness benefit, again, is another $500 a week. It is applied through CRA. The way that one works is you basically, if you are off due to being sick or isolating, then you can claim up to 2 weeks of this program. So it's quite short. And it's applied through CRA. The weeks do not have to be in succession. Very similar to the caregiver one, and that one basically it runs for the full year. So this is more or less like for yourself if you are sick and you don't have sick time. This is what this is. So this is kind of the government's promise in terms of the Canadian-wide sickness leave. So this is affording people 2 weeks of sick time. Now it is on a week-to-week basis. So and very similar tests in terms of the family one, where if you are off, say Wednesday to Tuesday, you would only qualify for the first week because the first week you were off more than 50%. The second week you weren't. So therefore you don't qualify for it. So those are basically the 3 new benefits in a nutshell. One thing I didn't mention about the sickness and the family one was CRA is also withholding 10% on both of those as well. So rather than $500 a week, you'd be receiving $450 a week. All 3 of these benefits are taxable, so you will have to pay income tax on it. As anyone who has been on maternity leave is probably well aware, 10% tax is insufficient. Very, very rarely would you ever be at a 10% tax rate. So if you are collecting these benefits, there is a very high likelihood that you are going to owe tax. Now, for your personal situation, I would recommend speaking to an advisor, and they can kind of maybe run some numbers for you. In addition, with the Canadian recovery benefit, so that's the $1,000 every 2 weeks, very similar to the employment insurance. With that one, there is also a threshold. So if your income for the entire year is more than $38,000, you will have some of that, what you've received, clawed back through your income tax return. So if anyone's collected regular employment insurance, not maternity or paternity leave, basically if your income goes over a certain threshold, then you may find that you owe even more taxes at tax time. But what that is it's not actually tax. It's the government recovering some of the employment insurance benefit because your total income for the year was too high. So, for example, if you have a salary where you make $50,000 a year and you collect that salary for half the year, your income would be $25,000 for the half. And then the other half, we would look at what other benefits you're collecting. So, in that, you'd have your CERB, you would have your Canadian recovery benefit, and if those two, all those pieces added up to higher than $38,000, then you're going to have some of your Canada recovery benefit clawed back from you. So that is just something to watch. Come tax time, that could be an issue. Going forward for 2020, I think people, if you do some math, you could probably have a pretty quick idea where you're going to land. Where I see this being more of an issue is into 2021. So let's say all the stars aligned and things truly do go back to normal by, say, May. And now you've hopped back into your position making $50,000 a year. And because you only had a few months off, you're really going to make $40,000 from your employment, but you collected the recovery benefit from January to May. So in that case, a good chunk of that benefit that you've received is going to get clawed back because your income is going to be too high. So that's something definitely to watch. This isn't any way to discourage you from taking it. It's just more when you take it, make sure you know that you could have a potential liability coming up. I see a question posted here. So if you're already on EI, can you also use the sickness or family care benefit since you will not be able to job hunt? If you're already on EI. If you're on EI, then you would be still collecting through EI. If your EI ends, then you could look to another program. Would you just put through the sickness or family benefit as income that comes in during that period or not bother applying? So I wouldn't bother applying because what you're going to do is have your sickness benefit clawed down your EI. So that doesn't make sense to do. And then on top of that, you're using up a week of a benefit that you could have in the future. Now, the EI folks, I'm not sure what they would say in terms of the fact that you're not able or willing to work in that week. That's more of a tough one. I with the for instance, the caregiving benefit, one of the things in terms of who can apply, it specifically says that you did not receive any of the things for the following period, for the same period, which is Canada Recovery Benefit, the sickness benefit, short-term disability, workers' compensation, EI benefits, or Quebec Parental Insurance Plan. So that to me says that you can't apply to these other benefits if you are already collecting EI. There were some questions in the Facebook group, so I'm just going to pull those up here and I will go through those questions. So this first one I've read a few times and I'm not sure I completely understand it. So if you were terminated and are getting severance, but will be on maternity leave before it runs out, are you eligible for regular EI after starting your maternity leave once the severance runs out? Actually, now that I read it out loud, I get it more. So I think what she's asking here is that the first chunk of her maternity leave is going to get clawed back because of the severance pay. And she's wondering if could she just go on regular leave after maternity leave. And the answer to that would be no, because I assume you would not have enough hours to start a new EI claim. If you're working from home during COVID, are you eligible for any tax deductions? That is a big fat maybe. So the Canada Revenue Agency and key stakeholders are currently in discussions around this. I know the Canadian Chamber of Commerce is very, very heavily involved in it. And under normal circumstances, if you work from home such that principally all of your work happens from home, so definitely more than 50%, and or you're regularly meeting clients in your home, then you are allowed to take employment expenses for home expenses. So that would be things such as like your hydro bill, your water bill, your heating bill, things like that. Where it gets a little dicey is the Canada Revenue Agency does not like things such as your internet bill, your cell phone bill, pieces like that, because those are things that you would have paid for regardless if you're working at home. If, for instance, you had to upgrade your internet to super duper fast because your employer required it, potentially the change, like the difference between the super duper package and the normal package, that would be potentially deductible, but certainly not 100% slam dunk. Things such as like mortgage interest or your rent or property taxes, those are not deductible unless you own your own business. So there's another piece around this too, is that your employer has to provide for you a T2200. This is a huge contentious point right now in terms of taking these employment expenses because employers are feeling that this is an unnecessary burden to them for the 2020 year. An employer may normally have, a handful of people working from home or none, and now they have their entire staff working from home. So preparing that form could be quite burdensome to do. So we don't really know what's going there. CRA released a revised form for 2020, and basically the consultation told them, like, rip it up and try again. We don't like it. So I'm not sure what's going to happen there. This is definitely still up in the air. And once there is some more clarity, then we can definitely try and give you more information around that. Another question, can I earn any income while on EI without affecting your EI? So EI, the way that it works is your benefit gets reduced 50 cents for every dollar you earn. So if you are collecting $500 a month EI, and you made, say, $500 of employment income, or let's use an easier. Let's say you made $200 of employment income, you're collecting $500 of EI. So half of your employment income would be $100. So your $500 is now going to be reduced to $400 of EI, and then you're going to get your $200 of employment income on top. And this other one, if my partner was on CERB until the final payment in September, but we had sent back our son to daycare, which is one of the two reasons he was home, will he have to return his September CERB payment? So if he was looking for work, actively looking for work, and could not find work, then no, he would still qualify for CERB because he was laid off. It said the industry here is construction. He was laid off due to COVID. And if he's still looking for work, then I don't see why you would have to return that CERB payment. There's another question in the Facebook group saying, is it correct that the top up of hours to EI expires on October 26th? In other words, if you don't go on EI before that, it will go back to the usual hour requirement. So I can't find that anywhere. If anything, I could see that it expires on October 26th, 2021, but I can't see anything that says that. I absolutely cannot imagine that they would do that short of a window for people to claim. That doesn't seem correct, and I have not been able to find that anywhere. A few more questions here. When you make a small amount of income while on EI, do they just subtract that amount from the 2-week period that you worked? can money overflow into the next period? So yeah, basically my understanding is EI is technically like a payment, like a back payment. So if you received EI today, which I realize today is not an EI payment day, but if you received it today, it would have been for the past 2 weeks. So what you are doing is basically it's going to subtract 50 cents on the dollar of the income that you made in the past 2 weeks from this payment. I'm not sure what you mean about the overflow into the next 2-week period. If I cashed some stock options after I was let go from a former job and put them in a TFSA, does that impact my EI? I did pay tax on the stock options through the broker, but basically that money is sitting aside in an emergency fund. From a timing perspective, it was cashed in many months before EI and CERB began. So the fact that it was cashed in way before EI and CERB, that puts you in a good spot. I don't see that impacting your EI claim negatively. The next question I think is very reasonable. I'm kind of paranoid that my 2020 taxes are going to be complicated and look weird. Yep, you're right. And because you have the stock options, 2 T4s, plus some freelance, CERB, and EI. So how are you going to get yourself organized? That's a really good question. Basically, most of the stuff of what you have there will actually be provided on a T4 from your employer. You're going to have your statement from CRA from CERB. You're going to get your thing for your EI, your stock options. That's going to hit your T4, and your broker should also provide you details on the actual gain loss. This is definitely a year that I would recommend you going to a professional to get your taxes done, because there's some funny rules around stock options, stock option benefits. There's some tax deductions you could take there to help you out. This would be the perfect situation of where I was talking about if your income exceeds $38,000 on, for example, the Canadian Recovery Benefit. EI is a very similar rule that they can claw back your EI. Now, it didn't say here if this was maternity or paternity EI. I'm assuming it's regular EI. They can claw back some of the EI that you've received. So that stock option benefit is probably going to put a significant amount of dollars onto your T4. And then you have CERB and all those different pieces together. So that definitely could create a bigger tax bill for you, because your income will probably be above that $38,000 threshold. That's just my guess, though. Definitely just keep any of the documents that you have. I see another question here. I'm currently receiving severance through Payroll. When am I supposed to apply for EI? That would be after your severance is over. So I'm assuming that you have a continuance, which means you're continuing to be paid as if you're working there, which my understanding is those hours count towards EI, which works definitely in your benefit. And then you can apply once that has ended. My understanding is your employer will send your record of employment to EI once the severance or the salary continuance has ended. Thought there was another question in here from Jennifer, and I don't see it now. Let me just refresh the page. I don't know why Jennifer's post. I think I recall what she wrote, though. Jennifer was asking, basically, she was working for a school board, but her employment, she wasn't able to, or she chose not to go back to work because her before and after school care has ended. And basically, she's wondering if she would qualify for the the caretaking benefit. I always get the name of that one messed up. Yeah, it's the caregiving benefit. Would she qualify for the caregiving benefit because the before and after school care is ended? That one's hard. Now, I struggle with that one. I would think that one's really hard, because she's saying that her Her expertise is fairly limited to a certain area. But because there's no before or after school care, then that limits where she can apply. Um, I have a hard time giving a good answer for that. I would be I'm really on the fence with that one, to be honest, really on the fence because it's hard to know if the Canada Revenue Agency is going to see that. Like technically in the application, it says that basically one of the following reasons their school day program or care facility is closed or unavailable to them, and their regular care services are unavailable due to COVID-19. So I think that would help um, work in your favor to make you qualify for that because the care isn't available for your children. Where I see the government could take issue with is the fact that is there a job out there where you could work from 9 to 3 or something like that, and maybe that's not reasonable, and maybe that doesn't exist. So maybe you will be okay. But I have a really hard time giving you a for sure yes or a for sure no on that one. There's another question here. Can you clarify again how we calculate we are earning less than half of what we did in 2019? Do we take the net tax value from our tax return or divide by 15? 52 weeks. So what you're going to do is you're going to look at your tax return and ignore the tax pieces. You're going to look at the top part and it will say, like, I think it's line 101, employment income, and there's another line which will be self-employment income. Those are the two lines you're going to take. You're just going to add those two together. So that will be in the very first chunk of your tax return. Just looking to see if I had a tax return open on my work computer, but I don't. So it'll be in that first chunk of your tax return, and then you're going to divide those, like add those two numbers and divide them by 52, and that's how you would get your average weekly earnings. This is certainly going to have faults to it. You know, if you are someone who works in a very seasonal business, then this is not going to work in your favor. But it assumes that you have kind of a flat line amount of earnings throughout the year, and that's how that would work. Does that help you, Jen? And the other question, Jennifer followed up. Would I be eligible for the CRB? So that's the recovery benefit then, and demonstrate that I'm still looking. I think that's what I would do, Jennifer, is I would do the CRB and show that you're actively looking for work. And then at that point, I think I feel more comfortable with that one necessarily than the caregiving one. Is there any other questions? I'm going to check the group again. For whatever reason, they don't always show. So I hope that I didn't miss anybody. Looks like there's more questions here and I can't see them. Let me just go. Bear with me here. Oh, Allison's asking me if I want to put them. I'm just going to log in on my computer. You know how the mobile app sometimes is fun. Okay. Okay, I can see Jennifer's question. Come on. Oh, here we go. I can see them now. Perfect. Christine asked, if my severance ended the end of August and I started EI after, am I eligible to receive EI until August 2021? It would depend what type of EI that is. To be honest, I don't actually know how long the regular like working EI is. So basically you'd be eligible to take it until it runs out. Here's another one. I was temporarily laid off in early March. My EI application at the time was pushed to CERB, managed by EI. My employer, although unable to recall me full time, has been able to provide me with part-time hours over the last few months, which has been fine since the CERB program allows us to earn up to $1,000 a month. Now it's my understanding CERB will automatically push me to EI since I've already applied months ago and was eligible. Is that correct? Is there any clarification on whether the EI will allow us to work part hours while collecting EI without being penalized? Yes. So the way that it works, well, in theory, what happens is your CERB application through EI is supposed to automatically roll to EI. I've heard that that maybe isn't going to be as seamless as they thought, but it certainly seems to kind of be on a case-by-case basis. EI will allow you to earn while you work on it, and you're going to have 50% of every dollar earned clawed back. So you still should be okay to work. Definitely with EI, you can't be refusing work, because if you're refusing work, then you will lose your EI. But it's not supposed to be so punitive, at least. Another question here. I'm currently in the middle of my 18-month maternity leave, 11 months now. I'm also pregnant with my third baby due in January 2021. So I figured I wouldn't qualify for another round of EI. However, I'm a teacher and the school boards are desperately looking for teachers to fill supply positions. Would it be worth it for me to return to work for 3 months? What factors should I consider? Absolutely. The 120 hour for ERIs, it's amazing. So like 120 hours, that is not a lot of work. And I would definitely consider. Now, I would probably advise you to call Service Canada and make sure that credit would apply to you because you're currently on mat leave. So I would confirm that, but I don't see why it wouldn't, because you can technically go back to work at any time when you're on mat leave. Even if there wasn't COVID-19, you could choose at 12 months to go back to work. There's nothing stopping you to do that. And how will they calculate my EI if I only worked a short period of time? They would just take your best weeks. So same as always for that calculation. Another question here. So for the non-EI Canada Recovery Benefit after $38,000, you get 50%. How might this work? I've been on EI and CERB all year, so less than $38K. Now, if I work in a casual role, will I qualify for the full amount until I reach $38K? Yeah, so that part is confusing. So when you are collecting your Canada Recovery Benefit, you will get your full payment, or that one you'll just get your full payment. That's the long and the short of it. But what happens is when you go to file your taxes, you may be over that $38,000 threshold, and it's at that time they claw back the 50%. Because with the Canada Recovery Benefit, what they're doing here is they are making it that as long as you made less than 50% what you made last year, you get it. So it puts cash in your pocket right away. But if the 50% that you made last year would have put you at like $100,000 salary, at 50%, you're still going to make 50 grand a year. And that's not what they're trying to target with this program. And that's where when you file your taxes, you're going to find that a whole bunch of that's going to be clawed back. Yes, and then there's a clarifying question here. So if you make less than 50%, you can apply. I only worked till April, severance to fall, and then EI. That would be interesting. They didn't give an example in terms of that. So this is a situation where she worked from January to April, I guess we would assume 2019, and then got paid severance into the fall, and then EI for the rest. So I would think very reasonably your average weekly wage should be whatever you made while you were working and on your severance, divided by that number of week. But we do not have any clarifiers for that. And I wonder what reasonable work is considered when it's much less than our usual hour rate. Is this considered reasonable? In terms of you can't be refusing reasonable work. That's a hard one. I'm sure that there's precedent in the EI world. This is somewhat nearing EI, so I would kind of look to those rules. And I must say that I'm not an EI expert by any means, so it would probably I would recommend kind of diving into the EI world to see what is considered reasonable work in terms of if you're going to be refusing a position. Okay, I think that is the Facebook group questions, and then a few more popped up here. Yeah, so the clarifier here, 3/4 of the year I was on EI, so my weekly wages reduced to this loss. So I would assume that you're going to take the weeks that you worked to divide by, because in the calculation, it's not saying employment income plus employment insurance plus self-employment income. It's saying employment income plus self-employment income divided by 52 weeks. So I can only assume that you'd be able to reduce your denominator. And if you can't, that seems pretty unreasonable. And I'm sure that they would that would be listened to if that was the case. And regular working EI max is geographic dependent. For me, it was 38 weeks. The file was open for 1 year. You can ask EI. Oh, there we go. So that was the question of, can I collect EI for 52 weeks? And I said, I don't actually know if it's not maternity leave. And someone so nicely said that it's dependent on where you live. So in that area, it was 38 weeks. So definitely check to your area. I think that's all the questions. If I missed any, definitely pop them into the Moms at Work group. I'm usually pretty active there, trying to answer whatever I can, and certainly happy to answer your questions. So just as a really high-level summary, 3 new benefits. They're all through the Canada Revenue Agency. You apply through my account. They all are going to have a Canadian, or they're all going to have tax withholding of 10% off of them. So it works out to $450 a week for each of the benefits. Please remember, 10% tax withholding is likely not enough. Unless that's all the money you're collecting, you will be owing tax. So just like maternity leave, get ready for that. Set a little extra aside if you can. And with the Canada Recovery Benefit, if your total income for the year is going to be more than $38,000, you're going to see a clawback of that benefit on your tax return, which again is going to certainly cause you to owe more money at that time, in addition to the insufficient tax that's been withheld. So happy to help you guys out. And if you have questions, we'll see you in the group. Thank you.